Good afternoon. It's Quant Trade Edge, and for today's wrap up, I wanted to do a deep dive into natural gas. It was the only market that was particularly interesting today. Crude oil was a little interesting, most everything else chopped around. This is the daily chart of natural gas, and we had this extended run, which is defined as 7 or more closes above the 5 period simple moving average. We had 13, and I believe this was day 14. When you test back below that, you typically will get at least one more close back above it, which could have been considered yesterday. But what I like to target is what's called this pocket, this very last area that forms a pocket. And that name comes from Damon, Linda's husband. He used to call him Pocket Man. That was one of his favorite terms and favorite things to use, and it's very useful. And as you can see here today, we got right up to that level, barely. If we break it down further, so we know that we broke over a high yesterday, so we changed the strings of downs to an up, and then today we took out that high. And if we break it down to a 30-minute chart, you'll see in the morning, this was, let me get rid of this. This was setting up like a inverse head and shoulders, call it a cup and handle, you can call it whatever you want to call it, but there's basically compression over here on this side, and if we take it down to a 15-minute, you'll see it even clearer. Is that right? Maybe it was the 5-minute. Yeah, there we go. So all the way down to the 5-minute, just ahead of the pit open, we got our little sign of vol compression, ATR 3 divided by ATR 20 of less than 0.7. And either way, this was a pretty clean pattern. This is the 5-minute view. This is the 30-minute view where you could see the whole thing. You could also look at it as a horizontal cup and handle type pattern. The big picture here is just that we had prices compressing as they were making higher lows in the bigger picture. This is the 30-minute chart. We have higher lows here, higher lows here, higher lows here, higher lows here. And then this came down and took out that little consolidation, but still overall it's a higher low. And stick with me, this is going to get really interesting. So, a whole bunch of higher lows into this breakout point, and this breakout happened at exactly 8 a.m., which is pit open. If we take this down to a 5-minute chart, you're going to see a couple of really interesting things here. Let me clean this up. We don't need any of this anymore. So we broke out, let's just say roughly here. This was the 8 a.m. bar, and we had this breakout, retest, and go. And interestingly, you'll see that we have our three little Indians, whatever you want to call it, which help mark a short-term top. And if we break it down even further, this second Indian on a 1-minute chart was 3 actual Indians right here. One, you have this down to here, this whole area here as the second, and this higher high here is a third. And 1-minute charts are a little detail oriented, but this, it's definitely worth it. This was a 10 or 11 cent drop over 7 or 8 minutes. And then that basically formed the basis for the third Indian here on the 5-minute chart. Now, sorry, this is getting messy continually. If you were following just the RSI itself, you could have thought this was the third Indian, meaning this little 1-minute pullback that we had that had the clean 3 Indians. You could have thought that was also the 5, but there are two things that should keep you from falling into that trap. One is this happened at 9:10 a.m. That's not a reversal time. Around here, this happened at exactly 10 a.m. And as I've mentioned before, 10 a.m. is a significant time in natural gas. It's when people stop scheduling gas for the next day's flow and start focusing on time frames beyond that. But another thing is you kind of want 9 to 13 bars between these divergences, call it roughly 10 bars. And here we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 11-ish bars here. 1, 2, 3, 4, 5, only 6 bars here, which is why you would avoid it. And then if you continue, 7, 8, 9, 10, 11, 11 bars. And so choosing, let me take this off. Choosing this as your third top made sense because of the time of day and the spacing between the tops. Between this top and this top is about 11 bars. Between this top and this top was about 11 bars. And that gave us, a clean 2-wave pattern. And actually it's cleaner on the 15-minute. And then this 15-minute pattern launched up to new highs, which finally hit. That little pocket was at 749 and change, and we hadn't hit that yet on the day. But this final 15-minute flag, which ended at about noon, and remember, noon is also a significant time in natural gas. Every 6 hours, 6, 12, 6, and midnight, there is a weather report that gets updated. So there are changes in expectations from the previous weather report to the current weather report. And that led to that final leg. Now, if you blow this up even closer, you'll notice that it actually triggered and failed, making an outside bar. And this low was exactly 720. This low was 719.8. So if you used exactly 1 tick below, that would have got you. If you had even as little as 3 ticks below, that might have saved you in that situation. But remember, our goal is, even if there is 1 failure for each good trade, go ahead and lose 1 R to make 4. Or in this case, 3. I didn't quite get to 4. 4 would have been about 2 cents higher, would have been 4. So that's the power of staying on one market and staying extremely focused on multiple time frames, is starting from your daily assessment and your daily homework. When you find that breakout right on the pit open, there were several trades to be had. One was the initial breakout. Then along the way was the 1-minute 3 Indians to get a dime back off your cost basis, or however you wanted to trade it. I mean, if you traded it as its own independent trade, right here, these are the 3 peaks. Going off of this bar, so the peak was made here, the rollover is here. You could use that as your risk bar. And 36.5 against 35.2 is 1.3. If you really sized that up, you made about 8 times your risk between this risk bar right there and what you were able to capture down here. And this would have been the quickest trade to give us that. Then again, on the bigger rollover, when you had the 3 peaks on the 5-minute, that had a bigger risk bar, but you still probably got about 2R to the downside, which is pretty good in a bullish market to get 2R against the main trend. And then, by afternoon, you want to switch to a higher time frame to cut out some of the noise that you get in the active markets early. And using this 15-minute, sure, you could have lost 1R once, but then you could have made 3R. And that's just the power of sticking to it, knowing your market really well. This being natural gas, the time of day functions are slightly different. when it's active, pit open, knowing that the pit opened at 8 a.m., which coincided with this spike, knowing that gas stopped scheduling at 10 a.m., which coincided with that reversal, knowing that noon is a weather report, which also coincided with this reversal. It just helps you filter out some of the losers along the way if they don't coincide with, if the strict technicals don't coincide with what you know as inflection points in time. So that was the most interesting thing that happened today. Crude, overnight, let me take this off. Overnight, you can see at 7 p.m. Central, which is roughly Asian open time, it made a new high above this high, yet a lower momentum, lower relative strength. And that could have been a sign to enter a short here, but the short has a small leash for two reasons. One is we just switched from a string of down days to a string of up days. We're also, kind of have this little two-legged pullback, which sometimes can give you quite a bit. But the other reason is basically on the same chart, on the 120, we broke a trend line and then just retested it. So even just using that as an entry to get down here, so you still got 2R. Draw out our boxes so you can see what they are. If you use that as your risk bar, you can just visually see that this is close to 2R. But then you also know to cover here, and I still like the long side on this because our daily trend is still up. We have a two-legged piece here. And if this 120 pattern is going to hold, we shouldn't take out the low of this, which gives us a limited amount of risk to shoot for the top of this pattern or even higher. So to me, that looks like pretty good upside relative to this amount of downside. That was about it. Stock market keeps chopping around here. We're sort of in no man's land. It looks like it's one bad day away from disaster, yet we're still hanging out above these two support levels. So, we're above this March low. Feb low, late Feb low, and then this kind of couple of sets of lows in March, we're still technically above that. And it wouldn't take much to change that and be below it, but this is not a great place to short ahead of that support. You could try to buy ahead of that support, but are you going to be awake, what can happen overnight? So for right now, this is just something I'm avoiding and just looking for maybe intraday situations. But oil and gas seem to have their own fundamentals that are moving them in a more normal manner, regardless of what's going on here in the stock market. So for me, those are a little safer at the moment. Anyway, please drop a like and subscribe. Sorry if this was a little tight and messy, but there was so much detail in that one chart that I wanted to just show you. There's two ways you're building your skills. You're building the pattern recognition and what to actually trade, but then you have to be able to, let's say you learn patterns A, B, C, and D. You have to learn how to apply them in real time in multiple time frames on the same chart. And at least for me, I know that there's two different parts of my brain that control those two things, and it's not as easy as it sounds. So practice is the only way to improve that. So anyway, if you like this, please hit the like, hit the subscribe. Helps me keep pushing out content. Have a good evening.